Justin Pulitzer. This is my midweek video for Wednesday, April 5th, 2023. A lot of material to cover, so I'm just going to plow right in. So we had the end of the quarter, we had the markup, and we're starting to see a little bit of that hangover, a little bit of selling in some of the names that were up a lot, although it's been fairly tame for the most part. We had the oil shock. OPEC announced they're going to cut actually a full 1 million barrels, half of which are coming from Saudi Arabia. And we have a closed market on Friday. So if you're in any options plays that expire this week, you better settle them up before the close on Thursday. As far as sentiment goes, we came in a little high, a little bit above water. 51 isn't really such a high number, but given the rate of change from the bears, a little bit. And we saw that again also in the CNN poll. The prior close had been 60, by the way, so a pretty big drop today. But a week ago it was 38, so it makes a little sense that there was a little bit of pullback there. I just don't see it being so simple. A lot of end-of-quarter markup people, I guess, took that a little bit more seriously than maybe they should have. As far as the economic data, factory orders today were pretty crappy. It was doubly as bad as expected almost. It was 0.4 consensus. We wound up being down 0.4, and we were down 0.7, and the prior reading had been down 1.6, and now we're down 2.1. I mean, the data is really starting to deteriorate. We're even starting to see a turn in the job openings. We hear multiple accounts of people getting fired. It hasn't really shown up that much in the unemployment numbers yet, although it might this Friday. I'm curious to see how the market will take that, but of course we won't know immediately because the market is closed. I'm starting to think bad news could start becoming bad news. As far as Fed goes, the May rate hike had been on kind of back on the table. Today it's off the table. The VIX is pretty high for bonds. I think it's like in the 140s or 150s, which is like a 2 standard deviation type of a move. What do they call it? The move index. I got to pull that up for you guys. I got to see how I can do that in TOS. Doesn't look like the Fed is going to be hiking again. If the jobs number's hot, though, that will likely be back on the table. If it's not, not. 2-year, below 4%, but kind of just hovering around there. This range seems to be just kind of seesawing back and forth. Same thing with the 10-year, seesawing back and forth. May look like it's going to have a bit of a break here. We'll have to see, but I do believe that'll be associated more with recession. Yeah, we know lower interest rates are good for high PE multiple stocks, but ultimately, if the market is being pulled down, sort of everything gets pulled down. Keep that in mind. I do ultimately think that lower interest rates will be good for stocks, particularly the NASDAQ, but initially it may be a little bumpy. We're also in a little bit of a weird position here with buyback blackouts, going into earnings. So for the next few weeks, people selling to pay the tax man. I believe it's the 18th this year. So, this week maybe, next week is obviously the last week to raise money. Monday, of course, being the very last day. But if you're going to transfer money, it kind of needs some time to clear. So that'll probably be cleaned up by next Friday on the 14th. But that's really when earnings start. So things could get a little interesting. We got through Mester's hawkishness today, meaning Tuesday, but we still had Bullard on Thursday. So that could be a little interesting. I'm also on a separate note, not really something I'm going to get too much into here, but we are starting to see a lot of countries not using dollars anymore for settlements. India, China is really pushing this, and Russia. So I'm just curious to see if there's less demand for dollars, and if people are selling dollars and that floods back into the United States, could we have a dollar crisis, meaning the price of the dollar goes down as more supply comes online, but if those dollars are flooding back into the United States, will that then trigger more inflation? So there, it could be a very interesting situation here, although foreign earnings would benefit from a lower dollar, particularly year-over-year comparisons. As far as VIX goes, can't get itself arrested. They do keep trying, though, so I guess you got to give them a participation trophy. But if they can get it back up over 2009, maybe we do get a little bit of a run. We'll see. So sitting at the lower end of the range here, I still like buying puts or put ratios or put spread, really not ratios, but puts or put spreads and if you're going to do a ratio, by the way, maybe not like a typical 1-by-2, meaning you buy one strike and sell 2 times the lower one. Maybe buy one strike, sell a lower strike, and then go a little further out even still and sell one there. Yeah, it'll be for a bit of a debit. You won't be playing for credits there, and I don't like doing same week or even next week with those. I like doing 30 to 50 days out. But just kind of keep these things in mind. In the low VIX environment, you want to be more of a buyer than a seller of premium. Even calls, I'm cool with buying calls if you still think there's upside there. The TLT. This has been very, I don't really know what the word to describe it is, but it's kind of given us, I guess, head fakes. It's been a little head fakey. It seems like it's going to break out, and then boom, back down to the lower end of the channel, and here we're back up to the high end of the channel, or are we going to give it back? We know the 200 MA is key, so if you're long, 106.34 is the 200 MA. Don't let it get below there on you, and maybe trim out here into the 107s and maybe even up to 109s. Pretty simple setup there. 50 MA would likely be the first big target obviously the 20 MA, but the 50 MA would be kind of like my downside target if we lost the 200 MA. TNX, this is the 10-year, sort of the chart that rules all. Sort of the big boy. Interestingly enough, though, is coming down. So lower 10-year is, obviously good for P multiple premium. But we're going to have to see how fast it collapses. There is a little bit more room to channel low, which I do think could happen here, because we had a little bit of a look below and fail, and now the rally was to a bit of a lower high. Couldn't even tag out the 20 MA, man, jeez. We're back to 33.34, which has been key support. We may bounce again here, but if it does, we'll ultimately fail, 32.48, and then channel low coming in around 31.80 could be in play. And then if we were to have that move to 31.80, it's probably a good area to consider the situation with bonds, because yields could start rising again. So if you're, long TLT or something, you might want to book some profits if we do come into those levels. KRE also still not looking good. I told you I still think there's another leg lower with this consolidation. I don't know how much lower it's going to go, but it could. I mean, the 2 times range was a little bit lower, although we're so close to there, I don't think that would even hold. But 35s, maybe 32s, there's still an open gap to fill down there. That would be pretty nasty, too. Another $10 down in KRE. Market will not like that. So do keep that in mind. You really do need to see KRE firm up for, I think, things to sustain in the major market indices. JPM, everyone loves JPM, Jamie Dimon. The weather, it's like, I'm going to start calling Jamie Dimon Rain Man. We don't go outside when it's raining. How many minutes till Wapner, Ray? So, sorry, we gotta have a good time here. Not really doing all that much, although I guess holding in at some key levels. We had a look below and fail here, but the rally hasn't been all that impressive, really only to the 20 MA. Careful if we lose the 200 MA, I think that could be a short below 125.58 and currently rising slowly. Bank America's chart looks pretty crapola. I wonder if there's going to be a dividend cut in that mofo. Yep, you heard it, that mofo. We're coming down a little bit below the 20 MA. I think all of these, if you're short, you could use 20 MAs as stops. Me with 20 MAs. The interesting thing, though, here is we're coming down a little bit here, but money flow is sort of picking up a bit. We're going to know soon, the 17th of their earnings, so what is it, the day after, not next Monday, but 2 weeks, I guess, a week and a half. So, not looking so great. I know everyone's excited about Bank America's dividend, but, they're going to cut it. That's the thing I worry about. Schwab, not looking good. I've still been looking to do some kind of a put ratio on this for maybe the move down to 41s to fill in the gap. Look, if this stuff all keeps kind of dumping, it's going to weigh on markets. I'm just telling you. You need it sideways to higher. If it just keeps pulling, and if it dips a little lower, it's not going to be the end of the world, but you know, it's not encouraging to see these things go down. I mean, you know, the Fed, in all of their infinite wisdom, decided to hike rates when raising rates is what kind of caused this banking crisis to begin with. I think everyone's sort of waiting to hear the earnings to hear how much deposit. This is also on the 17th. It's sort of going to be like a, hopefully not a Valentine's Day massacre. But if it's down enough into numbers, maybe there'll be a bit of a relief rally. But, you know, it's kind of hard to, you know, just buy falling knives like these. They just, they kind of tend to bounce initially and then they fall a little more. Goldman Sachs above the 20 MA, so if you're long, it's got to hold. The bounce really wasn't all that impressive off the 78.6 to the 61.8, so I guess if we clear the 61.8 again at 326.65, we could go up to the 50% fib and 200 MA between 337.69 and 338.66. So keep that in mind. That could be stay frosty, as they said. What was it that guy said in Aliens, right? If we could get over 326.87, that could be a long. If you're short, that's your stop, by the way. Morgan Stanley, also not looking phenomenal, although I think that they are a better company than Goldman Sachs. Certainly a little less on the I need a shower after saying the name factor, at least for me. 20 MA did reject, though, so yeah, got to clear those 20 MAs, 87.30. I just don't like loaning things that are below 20 MAs, you know, unless they're down a lot, you know, more into like other key supports. So are we in the midst of the dollar crisis? I'm curious. We're finally starting to give up some key levels here. It took a lot of days here for some of us who have been bearish on the dollar. Bad news if you're traveling to Europe. Time to go was September or last summer. Still not so terrible, but, you know, not as good as it was. And there could be a little bit more room down to 100. I do ultimately think we could challenge those 99.418 to 99.667 breakout area. But we'll have to see. I guess if the Fed isn't going to be hiking, or if, you know, we're going to start going into this dollar crisis, could be problematic. I'm just hearing a lot of statements from foreign leaders, and it's got me a little, a little worried. Maybe not right now, but longer term, maybe even medium term. Gold. Dollar problems always get the gold bugs excited. Ooh, do they get excited? They're an interesting group of people, by the way. They're usually the ones who have the, emergency food supplies also, which I do think isn't such a bad idea these days. Anything below 186.10, probably a good stop, and short. Anything above there, still okay for 193s to 194s, and who knows, maybe even an overshoot. But 186.10 plus I like, below no bueno. Sort of like disavow if it gets there. GDX looking kind of good. We're right up into the 61.8, so 33.93 plus into 34.24. So this is the sell zone that I had mapped out. We didn't quite get there the last go round, but we did now. So book some profits. Anything below 33.93 you might want to stop. But if we can stay above, the next spot would be 37.31, which is the 78.6. Below the 61.8, we could pull back. I would say it's an outright short if it can't hold above this 33.34. Basically, we'd have stalled at the 61.8, and guess where we'll pull back to? The 50% fib at 31.56. So keep that in mind. Newmont Mining also kind of ripping and a-roaring. We're right into the 50% fib, a little weaker than GDX, so that's not all that great. This was one of my sell zones. This should have been, I don't know, I thought I had a line in there. So 51.12 to 50.88, which we're right into. Maybe there's a little bit more poppage to fill in the gap here at 52.34, but I'd be a seller into those levels. Probably just a good area to book some profits into, and raise stops. So where would the stop be now, by the way, if you're long? Well, 50.88. Don't let it get below the 50% fib on you. If it does, where could we pull back to? Well, the 38.2, which was the last big resistance, and could be support again at 48.71. So, yeah. Maybe a little higher, probably a little higher, but probably a good area to trim into. The Bitcoin hasn't really taken off yet, but it sort of looks like it may. We've seen these moves before, but this one, I'll tell you, if gold's going to get going, Bitcoin's going to get going. We filled the gap here, and it's just kind of chilling. If you're long, 10MA looks like a good stop now, below 28,079. Next big targets are 32,480 to 34,295. Yeah, that could be something. Wouldn't it be something? Oil. So we got that Saudi news. We got the pop up here to recent range high. We're over the 100 MA, by the way, which was resistance and now might be support, 76.98. So if it comes down here, you probably can buy the dip between there and the 50 MA, I guess, for a bounce. Speaking of which, we got to clear and hold this zone. We'll see if we do. We have spent some time up in this area before. It wouldn't surprise me if we kind of chop around a bit. But if the bulls can clear 81.30 to 82.64, we could be coming up to that all-too key 85.41. Now, I would trim some at the 200 MA, because why not? 84.31. If you're long, we're one time framing up here, so just be careful. If you're in it right now, 80.80 is a good stop. Or if you want to use 79.61, dealer's choice there. XLE, we lost the kind of the dubstep setup here, which I wasn't surprised, because it was too narrow of a candle. But look where we pulled back to, 50 MA, which was the key resistance. So right here is the do or die, these 84.69 to 84.76, or 85.01 if you want to use. I'd be very careful if we lost the low of day at 84.25, because we could fill in the gap here. 82.83, basically a 200 MA check back. So we stalled at the 100, we got the 50. If we stall at the 50, we'll get the 200 and maybe even the 20. But 50 MA plus, I'm cool being long. Below, not so much. Exxon, I think, is nearing the all-time highs. Nice little dubstep setup here. If you're long, 114.17 is a good stop. Below there, you could be short, and you could use 115 plus as a stop. If it triggers anything above here, it could keep running to 117s and 119s. Basically, we filled in the gap. Some responsive sellers here. Not a surprise. Chevron. Right into 100 MA resistance. It's got to hold 167.10. Anything below there, I would not be long. Okay, just let's keep it that simple. Above, okay. Below, no bueno. Oxy, the Warren Buffett oil stock of choice, right into resistance, the backside of the old uptrend, two kind of bearish candles, opposing tails. So what the F? 100 MA was resistance, it was support, so if you're long, 63.91. So I'm going to put an alert below 63.91 to 63.90, and below there is a short. Okay. Anything above there to me is just chop and okay. Where would the pullback be to? Well, 50 MA, obviously. So it could have a quick couple of smackers there on the downside. There'll be buyers, though, so don't get too excited. HG, Dr. Kappa. We don't talk about this much, but we did the other day, and it did stall right where it's supposed to. We're back below trend. No need to own copper or any of the copper stocks as long as it's below the 50 MA, which is currently $3.97 and change cents. We are into some support here at the 100 MA, so I don't know that you need to short it. But if we did lose 39445, basically the Monday low of day, yeah, you could play short, maybe even move down to the 200 MA. Of course, copper weakening is, not such a great sign. It's Dr. Copper, and, people start speculating about recessions. FCX, 50 MA resistance, good spot to sell into. I'd be a 200 MA buyer, though, if we pulled back to 35s again. But, right here, you got to see it clear the... If we get a gap, and just stay on guard for this, by the way. If we get a gap and go, I'm going to put the alert over this high, because I'm a tough grader, 41.35, so 41.36. This could be a pro gap, and I'll say chase it. Exclamation point. I just saw that... Seinfeld where they had that. So if we clear that on a gap and go, it could be a chase 43s, maybe even all the way up to 46s. But let's not anticipate that happens. We have to actually see it happen first. NTR, this is the old potash. Interesting little setup here. It's held this 70, 76 multiple times. If it breaks, I think we're coming back down to the 61.8. And this was a big breakout area around 58.99. This was the high from back in 2018. So that area to me would be an area to target if you want to do some kind of a $10 wide put ratio or spread. We've danced on this level once, twice, 3, 4, 5, 6. I mean, we just keep dancing on it. 200 MA has been resistance, so that's got to clear at 80, 79. But keep an eye if this does break. CF Industries. I think Dan low boned this a while back. I don't know if he still does, but it held where it needed to, the breakout. So kind of dealer's choice here. 70.32 is a good stop. Likely resistance, though, closer to 79.18 is where it broke down from, so do keep that in mind. We know Deer and Cat got frickin' smackarooed after that, crappy economic data. So what now? This was of course, the factory orders. It's kind of riding channel low, riding dirty down there. I'm cool with re-rendering this a little like this here, because this to me looks like it has the most touches. I don't really know what I want to say about this other than it's making lower highs and lower lows. 200 MA has been clear support, so if you're looking to buy the frickin' dip, this would be the right or right out at 384, so do keep that in mind. Hard to talk Deer without Caterpillar, which used to be Cat Tractor back in the day. 200 MA also is key support, so if this is going to really flop and do the triple Lindy on the downside, it's got to break the 200 MA, and then I think it could come down to this 196.96, which is sort of where I was thinking it was going to go initially. But we did get that little bounce here at the 50 MA, up, actually a pretty decent sized bounce. But keep an eye on the 200 MA if it can hold or not. If you're going to buy the dip, I'd do it smaller size because it's a second test. Let's do the ES and the NQ, but of course we're going to pull up SPY Foist. I got a lot to say about this, by the way. So pay attention. All right, so as far as the ES and the NQ goes, there's things to like here for the bulls and the bears. The good news is we made the highs of the move in a pre-market session, which usually has to happen RTH, although we did technically have a look above and fail of the RTH Monday highs. We fixed or repaired Friday's rich close, which we were sort of anticipating. For me, the bulls now need to get really back up over 41.57.75 and hold. If they can do that, I'm impressed. As far as the Qs go, we still have poor lows from last Friday at 13,154. You can see all these. Let me zoom in here. These sort of touches down here. I guess, just looking at this, I guess there was a little bit of excess here, but I wouldn't call it material excess, so I shouldn't say poor low. I should say maybe weak low. I don't know what to really. I mean, I don't even know if I would. It's treat it as a poor low, though. It could be a poor or weak low, because this was really how this rallied. They couldn't get it lower. So if this gets repaired, be on the lookout, of course, for a look below and fail. But if we do lose this zone, we could pull back to 13,082 to 13,057 half. That could happen. So we'll see. And there are some little interim levels here. It could get rid of not that one. We're not getting rid of that one. We'll get rid of this one. And do we want to use the pre-market one? No, we'll use the RTH. I'm cool with that one at 13,111.75. Kind of just bleeding off a little bit. We did roughly kind of hold the VWAP from Friday. I mean, multiple times we kind of traded it back and through it. I'm really not sure what I want to make of this, other than I know the bulls, in my view, need to get over 13,275 half to 13,300 11.5. Really, if you look at Sunday's gap down here, it started below 13,275.5. So we ran up to that on Monday. We were able to trade through it, and we need to get over there. If the bulls can do that, I think they're back on the upside. If not, lower. What did I say in my last video? I said if you're long, don't be long if we're below 410, and we're a little below 410. So what am I worried about here? A couple things. One is there's a lot of chop we've seen. If you look left, we could do the same, but we could also have a lower high on Wednesday and have a secure high setup. Look where we pulled back to, by the way. I told you if we lost 410, we'd pull back to retest these 407s. We bounced pretty nicely there, so no complaints. But anything that remains below 410 is no good, and if we were to lose 407.24, so let's make it 23, you want to probably stop longs or stop remaining longs and try short. Where would we pull back to? 405, probably 402.49, maybe even back to 400. Okay, then we'll reevaluate things. Fed day high was 402.49, so that would be a logical check back place. The 50 MA is right in there at 401.61 and rising. That'll likely line up, so that would be a very logical, place to pull back to. What was the big resistance on the Fed day? Roughly the 50 MA. When we lost the 50 MA, where did we go to? The 200 MA. We held the 200 MA. Where did we go to? The 50 MA. We had the end of quarter markup. So we may have had a little bit of an overshoot. We may need to check back. We will see. Very simple, though. Above 410, that sustains. And really, if we get over 411.92, we could run. Boy. Ooh, boy, could we run. We could run. That would negate some bearish patterns. I would think at least 412.91, probably 418, 419, maybe even a run back up at 420s. Remember the $10 table. So, very, very key. Bulls really do need 410 plus, and they desperately need to hold 407s. If they lose that, it's going down. The expected move is only $3.87. Keep in mind, we only have 2 more days to trade, but it is possible we get a larger move on a VIX pop. So I would think of that as a limiting factor to an up move, not necessarily a down move. I don't really want to get into the too much nuance other than that, but just when VIX is low, think of the moves as more of a suggestion, or maybe even a just an upside kind of cap as opposed to a downside move. Let's get into DIA. Expected move there is $3. Alrighty, so we have a nice little dubstep forming, but we did overshoot it. We did fill the gap though to the 61.8, and we bounced. So very, very simple. If the bulls can't hold the low of day of 332.63, and it held pretty much almost to the tick. So 332.62. Below there, I would say now is a row short. Do keep that in mind. Anything above the 100 MA here is okay. We did get into resistance in 336.12, so I'm going to put an alert over the high of day, 336.26. This is sort of the move I don't think a lot of people are expecting, so if it were to happen, I'd be a little more bullish. Where would I be targeting? Probably 340, maybe even 343, but first stop would be 337.42, which is the 78.6. So we're up a lot. Above 61.8 is still okay, still bullish. Below, I would be targeting the 50 MA at 331.42, which is pretty close, but ultimately I would think 329.25, which is the 50% fib. And maybe an overshoot. Let me draw in a box here. When do I pass up an opportunity to draw in a box? So between the Fed day high of 327.56 to 329.25. I'm going to make this yeller. Okay, so that would be the next big target in the DIA. Speaking of Dow stocks, just want to take a look at Boeing. Still looks okay. I know a lot of people were bearish on this and really wanted me to get bearish on it, and I was sort of getting on board until we broke the 50 MA. So very simple. If you want to be bearish, wait for it to break the 50 MA. On the downside, 188 would be some key support. The 100 MA here supported, so that would be my first downside target. A bit of a secure high setup here, though, and we are into some resistance. But we're back in the green channel, so if we fail the green channel, it's back to the red channel. But if we stay in the green channel, could we go all the way up and up and up? I guess we're going to find out. Guess we're going to find out. This 3M is below the COVID crash lows. I don't know what's up with this company. They must have something brewing. Not very encouraging. I have been wanting to buy this because I do feel like it'll have brighter days, because, you know, we all use the 3M products at some point, right? They make so many things. But it doesn't look good. I got to tell you, it's interesting. The money flow is starting to pick up. Let's see what happens on their earnings. I'll tell you, if the earnings are good coming from this low base, no matter what they do, I would try chasing it with a stop like right below them if the earnings can like pop and hold for maybe a day or two. We'll see. IWM expected move is $2.68. And it's very possible, by the way, we just have this like sideways chop for a while, and I'll show you in NASDAQ what I mean. We bounced up here to the back side of the old up channel and pulled back. We're right on the 20 MA, 10 MA. The must hold is 173.39. We've talked about for a while. I don't really think IWM has much to do here other than this initial trade, but look where it stalled at the 38.2. If we can clear the 38.2, we probably go to the 50% fib at 183.36. I mean, ultimately, we'll probably get back up here at some point to the 185.78 where it really broke down from. But that day is probably not going to be soon, is my guess. I'm going to make this a big orange one. So this would be I'm going to call this a neckline. Yep, it gets the neckline moniker. It's sort of like debating between a Land Rover and a Range Rover. This does qualify in my book for a neckline moniker here. So we'll see. $2.68. The Qs. Everyone wants to know about the Qs. We're doing pretty well here in time. We've covered a lot of stuff. All right, look, we're right up at the channel high. I mean, come on. Just book some profits. Just do it. Do it. Do it. Come on, Chris. This is a BMW. Push it. If you know that's Deep Cut, Nothing But Trouble. Not such a great movie, but pretty entertaining. Good cast, too. Anyway, we're right up on those 224 lows. This is a dealer's choice situation because we are, believe it or not, still one time framing. We did ink a little bit of a new high and we didn't make a new low. So how about using the low of day as a stop, 317.83, and if you want to use the close or the high of day, so close would be 319.07, high of day would be 321.63 as a stop. We could easily check back to 315.25. I mean, we could do that like on the open with like not even blinking, you know? It's like sort of like rolling out of bed type of move. We did have some look above and fails, but we did move. Is it possible we do one of these for 8 days or whatever? I think it's possible that we're going to have this sort of like choppy BS and we may have to wait till earnings or even maybe next week to resolve. It's also possible we do something like this where we just kind of ride the channel. By the way, the last time we saw the channel high, we saw a lot of this chop crap too. So big wide ranges. I mean, this candle alone was from 279 up to 293, so we could be like in a $20 range. So maybe we go back down to, I mean, this would imply a move back down to even like the 50 MA. Possible. So that would be my big downside target here if we do have some kind of a larger liquidation break, somewhere between the 20 MA at 306 and the 50 MA down here. So if you're doing some kind of a put spread as a hedge, maybe buy 315, sell 300. That makes sense to me. But yeah, we are kind of just riding around up here, and today didn't really look all that terrible just yet. SMH, not exactly getting crushed, but we are into some resistance. If you want to use the 10 MA as a stop, I mean, we could easily pull back to the 20 MA and not be that big of a deal. 258.59 was clearly going to be some resistance. 249.35 would be my big pullback target if we do get there. And if you're long and you're kind of trying to hold on to it, don't let it get below there on you. Just don't be that guy. The 50 MA could line up with there, but the 20 MA would likely be some key support, which it has been. And if we're below the 20 MA on the SMH, you gotta not ignore that. If we get below the 50 MA, then you really gotta probably be short, but don't ignore it if we lose the 20 MA. And if you want to buy the 20 MA for a day trade, 251.34, write it right out. Very, tight stop. I wouldn't do more than maybe a buckaroo. NVIDIA. I keep hearing that this is like a short up here. So is it? Got a 2-day range if you want to try it. I'll tell you what, if you want to try short, let it break the 10 MA, 270.94, and then you probably got at least a pullback to the 20 MA at 258.07, but the 20 MA has been holding like a champion. So until those two break, it could just be some chopping consolidation up here. Poor highs, by the way, on this, so it wouldn't surprise me to see a liquidation break first, but maybe an ultimate repair. I'd probably, if we got a larger pullback, be a 50 MA buyer. But for an intraday trade, I would do the 20 MA. Why not? But, little resistance here, but nothing too crazy just yet. Moo, I was shocked this was up on earnings because the earnings sucked, and sure enough, we're back down. So 200 MA, do or die here. If we fail, we're probably coming back down to 54, 55-ish, which is the 38.2 and the channel here. But if we can hold the 200 MA, maybe we bounce up to the 20 MA at 58.14. We could just be in a choppy range for a bit. But Micron is a piece of crap company with a piece of crap management, and it always gets people excited, in situations where semis are going higher. We're into some resistance here, channel high. We kind of broke out of the channel, tried in, then we finally got back in. Now we're up near the high, so yeah, probably a good area to book, potential secure high. Be careful for a lower high on Wednesday, and if we were to lose 32.84, that's probably a good stop. 31s had been kind of the range high. I had booked it up around there. I'm a little disappointed because it went a little further, but we'll see. We'll see. But I do like still booking profits. Someone asked me to do lamb research. I don't like trading this stock that much because it's just a choppy ass chart. Sorry, but there's no other way of. There's better, easier charts to trade. I mean, lamb research isn't a piece of crap company. It's a pretty good one, but it's not a cheap stock, and it has 530 resistance that is now held twice on 2 checkbacks. 50 MA is kind of the must hold here. If it loses that, I think we come back down to the 100 MA and maybe even 200 MA. But if it can get over 530 and hold, maybe on earnings, above 530, I'd give it a crack on the long side. Below there, it's just conversation at the moment for me. All right, so there were some questions about the non-collected or non-billed receivables with AI. They had changed their model from subscription to, pay-as-you-go type of a basis. And the short seller came out and basically said they went from, a small number with the Baker Hughes account to a huge number. It's caused a huge pullback, so we're basically back to where we were 4 sessions ago. This stock has been super choppy in this range. It's right on the 20 MA, so it's kind of do or die over here. Usually these things don't end in one day, so there might be a couple of more follow-on days to the downside. There'll probably be some kind of a bounce after this kind of calms down a little bit, or we get some real resolution. The company's response was a little, I don't want to say, I didn't love it. I'll just say that. It wasn't bad, but it wasn't great because they kind of focused on the short sellers. I'd rather them have focused on refuting kind of the not so much the claims, but more focused a little bit more on their actual business, and maybe an update on the quarter would have been nice. How are things going? We're right on trend here, so this stock has been known to do this, so I don't know if I want to make too much of it. I did have, so I have some shares. I have a very small amount of shares on it, just like a teeny bit, but I had some short puts that I actually had rolled up. I took the roll up off for a small loss, which basically becomes a scratch when you go with the roll up. So I'm still actually up a little on the shares because I'd bought them pretty low. But, if we do get back up to 30, I'll probably bail on this. I may even bail if we get back up to 26s. We'll see. But yeah, these things don't usually resolve in like one day. I don't think it's so as bad as like Nikola, where they pushed the truck down a hill because the technology didn't work. I don't think there's any fraud really that's here. It's really just an accounting issue. But if they have to reach state earnings, stock will probably go lower. It's kind of a joke though, because none of these companies have earnings. So it's like, it's sort of all just based on future stuff. Tesla, they had the deliveries. They were good, but lower prices and maybe not the right product mixes. It was sell the news. So what do we say about Tesla? I like owning it when it's above the 20 and 50 MA. So as long as it holds at 187.52, I guess it's okay. Below there, no bueno. And I did tweet out that up here, this zone between 206 and 213s was a sale. And we said if it somehow shot up to the 200 MA, that would be a great sale, but didn't even quite get there. Not disastrous here, but I'd be a little cautious, particularly if the tape were to roll over. Apple's still showing us the way. Pretty strong, but it is into resistance up here. I think you got a good stop below 165 now. And if you want to try short, I guess you could. Probably at least for 157s, maybe even a 20 MA pullback to 157. What was this? I meant 162. I was thinking 157 because of the breakout, but I was pointing to 162. So if you want to buy some kind of a put spread with that as your kind of lower strike area as a hedge, I'm cool with that, but I would be a little bit of a trimmer up here. A little trimmer boy instead of a little drummer boy. I don't know where this humor is coming from today, but I don't know. It's sort of funny, but maybe that one wasn't so good. Microsoft at wedge high, good area to sell into. Starting to roll over a little on the money flow, good spot. Easily could pull back to 280 and 276. That zone to me is a must hold. We're kind of getting a little far away from the 20 MA and the 50 MA on some of these stocks, so checkbacks to those will happen at some point. But we could be choppy up here a little bit, but I would be booking some profits. Sorry if you're hearing some noise. My computer fan is spinning here. It's shocking because it's a solid state drive, but whatever. Guess the video is just too hot to handle, too cold to hold. Right up on 103.76 in Amazon. This could get to the 200 MA. Amazon looks pretty good. I mean, it was up a lot on a day. I mean, considering where the NASDAQ was, it's starting to look a little bit better. I'd be leery if it rallies too much into earnings, but maybe they do give it a little bit of a run. Careful if it gets below 101.26. That would be my stop out now. Google. The googliness. It's over the 200. Look, last time this has happened a couple of times. Just book some here. Just for me. Just do it for me. But it doesn't really get into too, smackdown problems until it loses the 200 MA, which when it does, it does. If it lost to 200, I'd think at least the 50 MA. It held where it needed to, though, this 100-ish area. So, yeah, I'd trim a little, but still kind of looks a little okay. Gonna be probably market dependent. Meta is kind of running here. I think they're going to try and take it to 236. You could use the 10 MA as a STOP. That's 206s, 206.65 and rising. If we do get a larger pullback on like a market whatever freak out, 199, 200 is the 20 MA. That would be a good day trade, or at least maybe a swing trade entry because it held the last time. As long as stocks hold 20 MAs on pullbacks, they're okay. If they can't, or if they fail on 20 MAs like the banks, that's Meta is the anti-bank. It's holding 20 MA. Banks are stalling on 20 MA. Netflix is doing what I thought it would do, but it kind of, if you're long and you're going into earnings, may want to fear. It's rallying into the number and it's coming back up into some pretty big reference resistance. I would say the head and shoulders pattern is negated here because you're above both the head and right shoulders, and it's kind of like getting into the head here. But I'd be a trimmer here at this 350, 71 and above. Maybe it gets up to 355s, but that's channel high. Yeah, it has overshot multiple times. but I'd be a little careful. If there's a bigger pullback in the market, maybe the 20 MA or 50 MA for a quick bounce play, but I'd probably be more inclined for the 20 MA at this point. But yeah, maybe a little higher, but I'd be a seller. Disney, everyone I know has been in Disney World. I was just talking to a friend of mine, and she just told me today, her and her kids just got, her and her family just got back from Disney World. I was like, holy crap. She's like, yeah, you got to go if you have kids. I was like, what about all the woke? She's like, I know, I don't like that, but the kids all want to go to Disney. Rides, Mickey Mouse, Star Wars. I'm actually, honestly, want to go see the Star Wars thing. Someone else I know just posted from there. I was like, damn, I want to go there. So don't worry, I'm not going. That trip would not fly with the girlfriend. She'd be like, what the F? So, Disney. Yeah, I mean, it's kind of going a little bit. I don't really know what to think of it. I'd maybe be a put seller if we came down to trend. I do think that 90 to 85 area will likely hold as some support. Maybe it's raised now to the 20 MA at 95. Careful if it gets below the 100 MA, because that's been the gong show. So 97.77. Don't let it get below there on you on pullbacks. And if you want to try buying the dip there quick, you could do smaller size though. Nike is another one of these kind of vaunted woke global companies that everyone loves. It's also doing a little bit better. Interesting with retail picking up here. This is usually not when retail picks up with the economy weakening. 50 MA is the must hold here, 122 quarter. So very simple. When we've stalled there and lost it, it's been a down move. I'd get decidedly more bearish below 119.84 though. CRM, Salesforce. Let's take a look. I know they just did a big round of layoffs because one of my girlfriend's friends was part of that. She got the axe. So I'd had this as the resistance zone at the 61.8 up to 95.72, but we're gonna narrow that down a little bit now. Oh yes, we are. We're gonna do the narrow. Let me see if I can get this over here. Sort of like Mortal Kombat. Get over here. So very simple setup here. It's got to hold on dips. 93.91, which was the earnings day high, to 95.72, which is the breakout. Anything over there is okay, and it lines up, by the way, very well with the 10 MA. Below there, probably want to stop, or at least on part. 20 MA, though, has been kind of the BTD. So, I guess buy dips at the 20 MA until it doesn't work. 187.83 and rising. PANW, the best of the cybersecurity names, which kind of had a crappy pattern, but did negate most of it. Get 2-day range. I want to use 195.59 as a stop on some of it, but this only really gets bearish below 192.93 and really the 20 MA, which is held. Again, another one of these holding 20 MAs is a buy the dip, currently 190.68. So until it stops holding the 20 MAs, you could still buy the dips at the 20 MAs. So it's, pretty simple. Fastly, I know that they were pretty heavily levered to TikTok. You're right on that downtrend here. Let me see if we drew in an uptrend here. I think this was the big girl who asked about this one. The 20 MA could be a buy the dip or trend. I mean, if you want to stick a little bit of this away and just view it as a kind of living option, I don't mind it. I mean, could it get smacked up on numbers and come back into single digits? I guess. Maybe wait for that or sell some out of the money footage if you want to own it. But if I was currently long, and I'm not, obviously, the 10 MA would be my stop. I would use below either the Tuesday low of 1664, but I'd probably use below 1631. And below 1631, I think you could even try short. Pretty simple there. The big girl, she had another one. What's up with that? So this paid a one-time dividend. I guess the trade is over. In my view, I guess they bought it back up after that. It's below the 50 MA. I mean, closer to. I'm just curious if we did a fib extension on this. I don't even know what this company does, to be honest. Mr. Zim. The only Zim I knew wasn't that Gene Hackman's character in Get Shorty? I think they made a sequel to that movie that was like so awful. Be Cool or whatever they called it. I don't think I even saw it, although Get Shorty was really good. Delroy Lindo, the late James Gandolfini, John Travolta, and of course Gene Hackman and Rene Russo. Oh yeah, it was and Danny DeVito, who I met, by the way. Very nice guy. Very nice guy. I met him at his restaurant in Miami back when he had it. All right. The 2 times range here would take you down to $5. I don't know if that's going to happen, but it certainly could, I suppose. I don't really know what to make of this. I mean, I know they paid that special dividend. I know the stock was down on that, but they bought it up afterward. Maybe down closer to 16 if it kind of bleeds out a bit. Technically, I don't really see much here other than, it's kind of holding the 50 MA. Now it's below it because of the special dividend. I don't really have much of an opinion. The stock clearly pays out some money here, though. I mean, they do pay out these big dividends, but I mean, it seems like they sell the stock off every time it happens. I'm curious to know about this. I'm going to put a little asterisk on this and come back to it. I'm just curious what it is because it keeps paying out this money, and it's down a lot though. Have a great rest of your week. I'll see you late night. I guess I'll see you. We'll do it on Friday. I mean, obviously the market's closed Friday for Good Friday, but I'll still do the video either late Thursday, early Friday. Is that correct? I usually do it late night Friday, but maybe I'll do it late night Thursday. It'll be up either late night Thursday or sometime Friday. Cheers. If I don't see you between here and there, because I know a lot of people are already away, the city's like a ghost town. Happy Easter. Check you out on the weekend video and then next week. Cheers.